Hey guys, welcome back to my YouTube channel. My name is Bessie Manyori. If you're new here, welcome. If you're not new here, still welcome. This is a channel where we talk about everything personal finance, personal development, budgeting, investment. I just basically teach you how to be a better investor or just how to become a millionaire in future. So guys, I also talk about things to do with being an international student in Australia. So if those are topics that interest you, subscribe, comment, share, hit the notification button so you don't miss another episode. So today's video, I just wanted to talk about a very interesting topic among Kenyans and just among investors in general. And yeah, I will be talking about treasury bills and bonds. And yeah, I'll just go ahead, define them, and we'll just be looking at how they are an important part of your portfolio. Treasury bills and bonds are debt securities issued by the Kenyan government to finance its projects or its operations. They are fixed income securities whereby they pay fixed interests on fixed dates over a fixed period of time. They are relatively cheap to buy. They are low risk and sometimes offer low returns, although it depends with the amount of money that you invest. Treasury bills are short term with a maturity period of 91 days, 182 days, or 364 days, and they don't pay interest as they are sold at a discounted price. In treasury bills, the difference between the issue price and the face value is treated as the interest income. So, for instance, let's say a treasury bills price is 100,000 Kenyan shillings, and the government is selling it for 80,000 Kenyan shillings. At the maturity time, the holder of the bill will receive 100,000 Kenyan shillings, and yeah, the difference is 20,000 Kenyan shillings, and that will be the interest. Okay guys, treasury bills require a minimum investment of 100,000 Kenyan shillings, and yeah, they are just options you can look at if you're intending to get into this type of asset. On the other hand, treasury bonds have a long-term maturity periods ranging from 1 year to 30 years, and they pay specific rates of interest on the principal amount, which is known as a coupon rate, to investors semi-annually. Infrastructure bonds are most common among Kenyans because they are tax-free. They pay interest semi-annually in that profits are paid once every 6 months. For instance, if you purchase an infrastructure bond from the government worth 500,000 Kenyan shillings, and the term of the bond is 10 years with an interest of, let's say, 18%. The interest per year, which is 90,000 Kenyan shillings, will be divided into 2 and will be paid to you every 6 months until the end of 10 years. I don't know guys if you've understood. And after the bond matures, you will be paid your initial investment of 500,000 Kenyan shillings. Okay guys, so when invested well, treasury bonds are one of the investments that can give you passive income. So guys, I will go through that again. Let's say you're buying an infrastructure bond of 500,000 Kenyan shillings. The interest will be 18%, and that will be 90,000 Kenyan shillings per year. Okay, so these 90,000 Kenyan shillings is divided to you into 2 to be paid to you 2 times per year. So if you bought the bond on January, you will be paid the 45,000 Kenyan shillings on, let's say, July, and then the other 45k will be paid on January. So if you want to earn passive income each month, you can spread the bonds over each month. Like you can buy a bond on January, you can buy another one on Feb. Like you can buy 6 months worth of bonds so that you can be paid 12 times a year. Guys, if you have not understood, please just rewind, and yeah, you will catch up with me. Okay guys, treasury bonds and bills are common among Kenyans because they are considered one of the safest investment options available, and they are also backed by the full faith and credit of the government. And I know most of you will be like, the way the government is behaving right now, they'll probably default on our bonds. but it's something that is in the constitution that they should pay. And also as an investor, you need not to worry so much about the markets. Like, markets go up and down, so if you keep worrying about all this stuff, you might not invest. The only thing you can do is not put all your money in one basket, like we talked in the previous video. Okay guys, so most bonds require a minimum investment of 50,000 Kenyan shillings, and if you don't have the entire amount, I always say, like, investing is a journey. You can start saving into your money market fund. Like, you can be saving 2k, 3k, 10k until you reach the 50k, and then you can go buy your first bond. Guys, buying bonds is easy. You can go directly through the Central Bank of Kenya, but I will be talking about that in another video. Yes guys, so both money market funds and treasury bonds and treasury bills are integral parts of the Kenyan financial ecosystem. So they provide investors with opportunities to earn returns on their investments while preserving capital and managing risk. When you're looking for an investment, you need to make sure like your capital is being preserved, the risk is something you can manage, and also it is compensating you for inflation. Okay, so because treasury bills are considered one of the safest investment options, you can just go buy them through the CBK, and longer term bonds generally offer higher interest to compensate the investor for additional risk of holding the money for a longer time and opportunity costs. Okay guys, investing in treasury bonds offers investors a predictable stream of income through semi-annual payments and the return of principal at maturity. Also, treasury bonds are highly liquid and can be bought and sold in secondary markets through licensed stockbrokers and investment banks, if at all you want your money back before the maturity period reaches. Okay, even though treasury bills are considered to be one of the safest investment options, they are not entirely risk-free. Remember, there's no investment without a risk, but this should not hold you back from investing, because everything is a risk, guys. Even you living right now, I always say it's a risk. I always say, with proper due diligence and risk management strategies, they can be a valuable addition to your investors portfolio. And that is one of the things I've observed with like, as you grow older, you invest more of your money in bonds because they are stable, the risk is quite minimal, and they preserve your capital. Okay guys, those are very important things to look out for when you're investing your money. So guys, I hope I have demystified what treasury bonds and bills are, especially for Kenyans, and they are an important part for you to just increase your money, and they are an important part of you to just earn passive income. That should be everyone's goal. So as you log off this video, make sure you subscribe and just go think about how you're going to invest in a treasury bond next. I will see you next time.